Good morning. Let's see. Bright sunny day here in Sarasota, Florida. How's everyone's doing? Are we ready for the rock pool day? It's coming. It's coming. Let me see how everything is running smoothly. Look like it is. So, all right, let's get to it. All right. I was looking at, as I always do every night, is I go through all the charts to see if anything worth pointing out, unless anything specific is asked as in the last couple of weeks. There's no need to look at everything because we all know how bad things are, right? We need to take a look at the crash scenes every day. It doesn't get any worse than that, right? But I look at Intel, and the big guy was bullish on Intel, I get last week because it was at the key spot, as you can see right there last week. And if you go back 3 years, okay, this spot is a spot that the big guy love to buy Intel or use put spread because you can see it, okay, bounce 1, 2, 3, 4, 5, okay, that's serious support on Intel at that 43.68 level. Well, that failed last week. So I went back and take a look, and as you can see, there is a major trend line here. This is major, okay? This is important. This is something that I don't think the big guy even have. I don't think. Edit property, let's make it big and fat so we can see it. Okay, let's save that. Let's save that. All right, so this line, resistant, break out, and then Intel beautifully checked the all-time high and couldn't do it. Okay, it sniffed the all-time high right there. Let me draw a line there. See that? Look at that. The all-time high is a wick. The reason why I draw the all-time high a little bit lower because that's, I try not to count that right there, but it's close enough, right, to see. But look at this right here. Look at this nice breakout, almost test the high, and then check back to this trend line, this key trend line here that bounced 1, 2, 3, 4. Okay, so if you want to play Intel for whatever reason, look, it checked to that perfect spot. Okay, it's not random. It came down and ripped, but now it's gonna go lower. Okay, so if you want to play Intel down there, okay, that could be support. Now, if the market go to, if the Nasdaq go down another 5%, do you think Intel is gonna stay up here? Heck no. Okay, heck no. All right, how low can it go? How low can Intel go? Obviously, this is the lowest it's been in the last 3 years, right? So let's go back 4 years, see what happened. See, look at that. Even 4 years, Intel's this spot 1, 2, 3, 4, 5, 6, 7, 7 or 8 times. That was so key for Intel. This is the multi-year breaking down, okay? Multi-year breakdown. So we have to go back 5 years for Intel. So this is key right here too, because if you go back to, let's go 6 years time frame, let's go, can we go 10 years? Let's go 10 years. 10-year time frame, this was a breakout right here. the breakout. Okay, the previous high, the breakout. Look at that. 38.21. Okay, let's draw it in. See, 1, 2, 3, 4. It's like 4 or 5 attempts right here to break out here, and then it break out and run. Okay, so worst case scenario for Intel, which I think is highly doable, is 38. Okay, right there. I'm gonna save this chart. Look pretty good. It's very clear on Intel can go. Okay, so for you, for me, if I was to play Intel, good morning, Socrates, Pigpen, Lowbrow, Crapper, David Jackson, good morning. How would I play this? Okay, let's go. I'm gonna go to my. I need to learn how to read options on Thinkorswim because I'm so used to trade option with E-Trade where I do trade. It is really hard for me to look at options on Thinkorswim and understand how they lay things out. It look confusing to me. But one of these days, I need to sit down and look at Thinkorswim options because it looked crazy to me. Tool, let's see, tool, nope, trade. There you go. That the option screen for Intel, right? And I'm just like, see, it's the big guy loved this because he felt that it give him really good analysis. See, look, if you have Thinkorswim, look, as far as spread, it's so many different kind. Okay, your mind can be going, spread. Look at that. You can do vertical spread, back ratio, calendar spread, diagonal spread, straddle, butterfly, condor. The big guy does all this crazy stuff. Trust me, when the big guy lay out his strategy once in a while, and I see what he's doing, he's buying something, selling something, buying something, doing both put and call. It's just like, it's so wacky that I'm just like, I'm smart, but that is just way above my pay grade. I'm just okay with put spread, call spread right now. That's enough for me to handle. But this is what make it hard for me to understand or read options. It would Thinkorswim. It's just way too much going on right here. Way too busy. But I will try one of these days when I have the time to sit down and look at these things because I like to be able to trade option using Thinkorswim analysis. Okay, because the hardest part about trading option is just had to figure it out. It's not easy, no doubt about it. Okay, no doubt about it. Let's take a look at Intel. I want to take a look at Intel. I want to take a look at my option here on Intel and see if I can see something similar. If I was going to trade options at this moment, I would definitely do something like June 10th or after, right? So I give myself 2 weeks kind of thing. Sometimes I do option that are 1 day. The big guy does that as well. Sometimes, depend on a big dump, he would go 1 day. If there's a dump on a Thursday, I'm likely to do some option on that Thursday with a 1 day expiration. But right now, Intel, let's go back and take a look. Intel, July 10th. Okay, so June 10th, I mean. So see, look at this. I don't want to understand what's going on here. How about June? Where's June 10th? So I don't understand the way. There you go. Now you see it. Okay, so June 10th. Here we go. June 10th. Let's go to the chart. June 10th, 40. Okay, if you want to do, say, a 40 and 38 kind of put spread, right? So let's see, analyze June 10th. What? Okay, put spread. 40 and 38. Okay, 40 and 38. See, I don't understand what they're doing here, to be honest. Because if I go to my E-Trade, it looked nothing the same. It looked absolutely not even close to what I see here on the screen. So I don't understand how to read or use think or swim options. So let's not waste enough time. I need to do this on my own instead of wasting everyone's time. Okay, but from my E-Trade, okay, I can see that a put on June 10th, a 40 put is 58 cents. That was yesterday, okay? 58 cents. And then a 38 put is 26 cents. So you're talking about a 30 cents to 32 cents gap, right? That's your premium. That's your credit. So you can sell 40, buy 38. And what you get is a credit of 30 cents. Okay, that means that if you do 1 and 1, you sell the 40, you buy the 38, you get 30 cents, basically 30 bucks, lunch money, okay? If, here's a key, if Intel stay above 40 on June 10th, okay, that's the key. You will make your 30 bucks, your lunch money there, okay? For those that don't understand options, I highly suggest that you go on the internet and do up some reading. There's tons of tutorial, even on YouTube, okay? Tons and tons. What I do a lot is, and even with put spread, there are bull put spread, and then there are bear put spread, okay? So what I'm doing when you're selling put above and buying puts below, you're doing a bull put spread. And when you're doing a bear put spread, it's the opposite. You buy the put above and you sell the put below. Okay, so trust me, take it easy and learn one thing, one concept at a time. That's why I am just trying to master the bear put spread and the bull put spread right now. Okay, I'm not trying to go over my pay grade with condor, a butterfly, this and that. It's just way too much for me to deal with. But if I was to play that, I would do that. Now, I play Pepsi put. I bought Pepsi put. Well, I put in a put spread on Pepsi last week at 165 and 160. Okay, that was my spread, my two strike. And always I try to close out half of the put spread on the big up day and then close the other half on the big dump day. Okay, so if you can take away from the concept, when the stock go higher, the put get cheaper. When the stock go lower, the put get more expensive, right? So if a stock go higher and the put get cheaper, that means that the one that I sold, I can buy back cheaper and make a profit that way. And on the opposite end, when the stock dump and the put get more expensive, then the one that I bought, I can sell for a higher price. You get that? Okay, so trust me, if what I just said in the last 20 seconds sounds so confusing, pause it, rewind it, and use a piece of paper to write out what I just said, because it will make sense to you. Trust me, it takes some mental gymnastic to get used to it, but once you do it a few times, it makes sense. Okay, TLT is popping today because once again the recession fear is in play. Okay, so this TLT had the crazy crashed all the way down to here, and since then it is not buying. The Fed is going to raise rate for the next 6 months. Okay, this is not TLT believing in the Fed. The Fed can jawboning or say all the crazy things like we need to raise 75 bips, we need to raise 6 more times, blah blah blah. That's what they are saying. TLT is saying not a chance in effing hell. Okay, TLT is forecasting and seeing the future of the economy, is saying for those that pay attention to the stock market, you know, the bond market foretell the economy better than the Fed. Okay, better than the Fed. So for me right now, that's what TLT is doing. Okay, it's showing me that recession fear is real, absolutely real. Okay, so there's still people every day on CNBC telling you that the risk of this recession is slim to none. Slim. There's no, I can't see it. Job numbers are fantastic. Oh my goodness. Oh my goodness. Snap. Got snap. Oh boy. This is going to take down the NASDAQ today. Make no mistake about that. For those that remember on earning, Snap was pretty bullish. Very bullish on earning days. Okay, they sound very positive. Not anymore. Last night they laid an egg. They said things are bad. Layoff coming. Missing number. They already Snap already foresee that they're gonna miss number for the second quarter. We are not even at the end of May, and Snap already sense that they're gonna miss. Okay, that's how bad things turn so quickly. Okay, so oh boy, it's gonna be bad for Google, it's gonna be bad for Amazon, it's gonna be bad for Facebook, it's gonna be bad for every social media. So QQQ, if you short the Q, today is a day that you can cash in on your protection. Okay, so yeah, it's not, no, I haven't traded short QQQ, but when I used to, I did the QID. Okay, QID. That's the one. That's the double pain. All right. Is that the double pain, or is that just a short QQQ? But I used to trade the QID. But if you do the SQQQ, which is that a double short or triple short? And regardless, okay, you're gonna be making money if you short it yesterday, or if you buy the SQQQ the last couple of days, then you'll be in the money today. And I believe they also have option spread on those things. So if you can also play option spread on those, okay? QQQ. What is it? Is it double? Ultra short? Yeah. Can you do options? The answer is, let me see. Yeah, you can do options as well. Yeah, it's juicy. Juicy. That's the term that the big guy used, juicy. When it comes down to option and the premium, there's some juice. There's some juice in the options. You know, for those, I'm gonna put more effort this week in talking about options, because I do a lot of it in the last month and a half. Because there's nothing much to talk about the market otherwise. You know, we know it's ugly. Okay, there's no spinning any kind of hopium for you guys. The reason why the big guy like to use put spread, call spread, condor, you know, name it, because at this juncture of the market, it is extremely risky. And by using put spread, whether you're using bear put spread or bull put spread, you put a limit to your liability. The rug pull won't kill you. Okay, for example, let's give an example on say Snap. Okay, Snap. Let's say you like Snap. You want to buy the dip in Snap, but you don't want the rug pull, right? Imagine you bought Snap around 20, right? Just like around, let's say around 21. You think the 52 weeks low is in, you're safe, you buy it, you're gonna get your rug pull. Now, let's say you play it safe and you use a put, you sell a put, like a 20 put. That means that if Snap go below 20, you have to buy the share or close your put at a loss, right? Let's say you can sell a put of a strike at 20 and you get a buck premium. That means that your break even is $19. So you say to yourself, I want to sell put, strike 20, I'm willing to eat the share at 19. That's cool. That means I bought Snap at 19. What a bargain, right? But guess what? On a rug pull like this, do you want to buy Snap at 19 when the market is selling and buying Snap at 15 or lower? Okay, you don't want that rug pull. Okay, that's why you sell. Let's say you sell a put at 20 because you're willing to buy it less than 20, but you don't want the rug pull. You can buy a put. This is how the put spread come in. You sell a 20, you buy, let's say, an 18. Today, it's a day that you probably break even because that put at 20, you will lose money on, but the one you sell at 18 will make money. So net, you might be breaking even. Okay, that's how the put spread are designed. It's designed to protect you. All right. And that's why the big guy urged me for the past few months to use it more. Just don't sell put. In a bull market, in a raging bull market, selling put is an easy way to collect premium and not have to worry about the rug pull. But we are in a bear market where the rug pull happen daily, weekly, and you don't want to be caught with a put below and the stock gap even lower than the low point. Okay, so use that, trying to understand it for your own protection. A lot of people think, oh, option is risky. No. If you don't understand options, option is actually control risk better than owning the share. Okay, if you don't understand how to use option, don't pay attention to people on TV that say, oh, don't trade option, it's risky. They don't know what they're talking about. Okay, if you don't understand option, stay out of it. Don't do something that you don't understand. But if you understand it, you will understand the benefit and the risk protection that option spread can provide. It limits your gain, but it also limits your loss. Okay, that's the job of the options. It's not about owning the share and have unlimited profit potential, or you can lose 100% of your money. That's what owning shares outright do. When you're doing the option spread, you limit your upside, but you also limit your downside. That's the key in a bear market. Hopefully that makes sense. If not, then I do a bad job explaining things. Okay. Let's see. Other area of the market, Pfizer. Yesterday, Bud did okay. I'm not sure what Bud's gonna do today, but if you bought Bud below 55 on Thursday and Friday, you did okay. I was waiting. I had a sell order up here at 56. Well, we're not gonna get that. Okay, the market's gonna take it down, but that's okay. Same thing with Mondelez. Okay, I bought Mondelez down here below 60, loving it. Well, below 61. It was 60 point, I think it was like 60.63 or something like that when I bought it. So yeah, it's fine. The whole market's gonna be down today, so don't expect that to escape. Okay, same thing with McDonald's. McDonald's gonna drop. If it drop enough, I might sell the put I have. I already closed out one put. I will close out the other half. Same thing with Pepsi. Okay, I will do the same thing. FV is the one that I have high exposure, and FV is gonna drop below, which is fine. Like I said, I have 2 put spread on FV right now, and they will both be losers if FV stay below 147. I wrote them like 140. No, I wrote 149, 147, and then 148, 145. But as far as money losing, not a big deal. Okay, I might be out like I still have until next Friday, so I have time. My FV put spread is out until June 3rd, next Friday. But everything is gonna be down today in the morning. Okay, Costco. Um, if you want to do a put spread on Costco, I would suggest doing 400. Well, if I was gonna do it, I'm not suggesting anyone to do it. I would do 400 and 380, or 410, 380, something like that. Okay, or 390, 375. That might be better. If there is such a thing as Costco, let me look at the Costco options. Costco option. Let's see what they have. Costco, yes, they do. They do have it. As far as a $5 thing increment. Okay, so on a Costco dump today, I think, let's see, 395, 375. That might be a good little area for me to play. Yeah, 395 is $7. 375 is 350. That's a nice gap right there. Okay, so I like, whenever I do a put spread, I like to use the levels as an area of range. Okay, I don't just like randomly throw some numbers out there. You know, for sure 375 is key, right? That's a key support line. So I can do 375, 370, no, 375, 355, like a $20 gap. Okay, that's safer to do. A 375 and 355 is a lot safer than doing 400 and 375, or 395 and 375, because hey, can Costco come down to 388? Absolutely. Okay, absolutely. That's where the big guy. If Costco can go down to 388, I prefer not to be selling a put anywhere near 400 and eat a $12 risk. Okay, it's not worth that risk. I would go with, say, you know, maybe 390, 370. Okay, that seemed like more reasonable. 390, 370, the $20 gap. There is, you can go, you can, depending on your trading platform. For me, it's better to go on E-Trade for me to see the juiciness of it, but I don't know how to do it. The big guy can. The big guy share many screenshot of his option screen over the years, and I just don't know how to replicate it. Okay, I don't know how to look at it and see, but he can tell how juicy it is. Okay, I can do it too, but I had to go do it my own way with E-Trade. I just can't do it. But for now, for example, let's go with Costco. For now, a 390 put is around $6. A 370 is around $3. Okay, so that's a $3. Okay, so that's not bad. Okay, going out to June 10th, you sell 390, you get $6. You buy 370, and you get $3, and it costs you $3. It costs you $3. You get $6. Okay, so your net credit is $3. That's $300. So if Costco stay above 390 by June 10th, you collect $300. Not a bad thing, right? And if Costco crash below 390, you have the option of buying the share at the cost of $3. So your break even will be 387. You see that? Okay. Once again, rewind what I just said so that you understand. If Costco go below 390 and you let both options go to the end, your break even is 387, right below the 388 mark that the big guy think it is. And look, the all-time, the 52-week low is 375. So for me, that is about as good of a spread of protection that you want to risk right here. Okay, what using this strategy is giving you a chance to profit on Costco without maximum risk, without the rug pull, right? Hopefully everything that I explained in the last 27 minutes makes sense. Yes. Now, Costco earning is Thursday. The juice on the options are always at the highest during the week of earning. Why? Because the market expect volatility. Okay, so high risk, high reward. I can guarantee you, if you go into next Monday, the options for those two prices at 390 and 370 will be substantially lower, because that's just how the market works. Into earning, the premium become extremely juicy, okay? Because high risk, high reward. And that's it, folks. I don't have much else to say. Market will open in 2 minutes unless there's any specific question. I was looking at Honeywell. If you want exposure in industrial for any reason, down here, okay, 183, 184, I see no reason to be in these things. None whatsoever. GE, if you want to be channel low, you can, but look, the 20 MA is coming down, okay? So it could be a good spot to gamble with GE for the pop, but yeah, it's a low risk, low reward if there's such a thing, okay? The risk of GE go down to 71 for sure. You get 4 sign down risk. Upside, I have no idea, okay? Upside, can GE get back to this 85 eventually? Note keyword eventually. Not happening this week, okay? Don't expect GE to come back to this week. No. So low risk, low reward. ANTM, down we go, okay? That was a great play for those that got in on this 100 MA that we talked about for weeks. But if you didn't sell, I posted in the chat group yesterday, if you didn't sell UNH and ANTM, Anthem, yesterday, what were you doing? What were you doing? Okay? If you want to do a put spread on ANTM, the big guy suggests down here, okay, for your maximum protection, you use something like, 430, 450, 430, okay, that would be where he would suggest you to look at the put spread down there for your maximum protection. ANTM has run very hard, okay, it has done very well even in this market, bear market. But if the market keep tanking, remember, the Dow Jones has held up better than the S&P 500 and the NASDAQ. Because why? Because of healthcare. Go and take a look. The breakdown of healthcare is I think healthcare is the biggest percentage of the Dow Jones with United Healthcare. Okay, so eventually, if we are going into a full bear market, the Dow Jones will join the NASDAQ and the S&P 500. There is no bear market in the past where the Dow Jones stay above and the rest drop 20, 30, 40%. Trust me, okay? Gravity will grab all of them. Phase 2 is still in effect, and it will grab and yank and pull the rugs on all of them, okay? So keep that in mind. So if you're gonna play Anthem, when Anthem dropped down to here, I didn't buy the share outright. I put in a couple of put spread order that did not trigger. So that's how I miss it. But that's okay. I will keep playing the put spread down here for my own protection. Okay. Oh yeah, they're all gonna get blasted. Okay, they're all gonna get blasted. It's I'm shocked. I'm shocked that Bitcoin is up. Okay, that's the one that I'm just like Bitcoin up. I don't trust that with anything. Okay. Um, yeah, today is an ugly day. Let's take a look at Pepsi. Pepsi. Oh, Pepsi is up. Safety. Early FOMO. How about McDonald's? Oh, FOMO. FOMO. Ah. Ah. I do not trust this at all. People, be careful. Don't FOMO into safety. That's all I gotta say. They are FOMOing into safety. How about JBXT? JB Hunt. JB Hunt is still in the hunt. CSX, yeah, down there. UPS, transport, ugly. FedEx, ugly. JPM. Oh, JPM after yesterday. I'm waiting. I'm waiting for JPM with a sell order here. 127, 129, 128, 129. I want to get out right there. Goldman Sachs. If you didn't sell Goldman Sachs yesterday, what were you doing? I don't know. Hope, hope, hope. How about USO? How's USO doing? USO still around 82, stubbornly high up there. It's okay. My put spread on USO is going out into June 17. June 17 is my put spread, so I got a long way to go. I bought myself a lot of time there. Would you sell call spread on pop? You could, okay, you could, but study up on call spread on what is. Remember, there are bull call spread and then there are bear call spread. Look at, Google it, read up on it to see what's the right play for you. But yeah, absolutely. I don't mind doing puts call spread and call put spread. I don't mind doing put spread or call spread. I I limit my brain to those two areas. I talk about put spread more, but I look at both. Okay. Um, all sunny baby. I have no idea where Bitcoin is gonna go. I can't say where it's gonna go. I don't know. I don't know. I don't have any uh, crystal ball on where it can go. GLD is doing good. Channel low. For those that bought with me, I'm still having it. I'm still holding on to the few GLD I have. Not a lot. I'm holding it. Okay. No need to sell anything. Same thing with GDX. Oh, that's DGX. GDX. GDX. Yeah. I mean, would I sell GDX at 32, 33? Yes. I'm waiting. I'm waiting. What else? Oh, Walmart. If you buy Walmart, you're okay. Okay. The big guy is not bearish on Walmart anymore. It did what it's supposed to do. Okay. He wants to see shoulder, head, shoulder. Now, I said yesterday that there's no need. There's people that ask me, should I buy? I'm like, you could. Okay. But if you wait it today, you get it cheaper, right? So it's just, when you want to buy something, you have to ask yourself, what is the catalyst to move it much higher? Is there a reason? Okay, sure, technically it looked okay. Technically the bottom could be in, but what's the point, right? Risk reward, meh. Anyhow, a phone call, I need to reply. So that's it, people. Out of here.